Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, September 28th, 2016. Hope you guys are having a great week, and let's get started. First off, I want to thank everybody that registered for the webinar yesterday. We should be getting a recording soon, so I'll send it out to everybody, but I do appreciate that, and we were able to reach our max number that we needed. So it's kind of funny, when we were doing the webinar, we had different notes and stuff than what I do here, and it brought up a lot of things that I don't really talk about on these free video reports. And the number one thing that traders, investors, anybody that's out there, the number one killer is emotions. And what I mean by that is, if you can't control your emotions, you're gonna make really bad trading decisions. And typically what happens is that you get everybody's bullish at the top, and if you're short, your emotions are going crazy because everybody's looking up in the market, and you're scared that you're going to lose all your money. The people that actually sold at the lows waited for a pullback, and now it's all this euphoria, and everybody's looking and giving targets at 2,300, 2,400, and your emotions make you just buy because you want to get in, and you're scared that you're going to miss the ride. And what happens is, typically when we get into that phase there, that is when we top and we come down. And once you see we get into this capitulation range, that's when everybody starts selling. We get the low sentiment numbers. Everybody's pointing lower, all the newsletters, and then from there we start the rally. So the way that you control your emotions is anticipating. One is anticipating when there's the trend duration, or how long is the move set to go for, and when is it supposed to reverse. So knowing when is one key factor to controlling your emotions. Now, what happens is, it may not play out as planned, and it may be a little shallower than the other one, but whether the reversal date is exact or not, it usually does not change the overall bias of the market. So if we were looking for the market to go down on a particular turn date, and it ended up just going sideways after that, it doesn't make the long side any safer, because it was still, typically what happens with that is the sentiment stays at extreme bullish readings, so it doesn't have any time to reset. And it's the same way to think about this, is that, how can a market crash if everybody's bearish on the market because they're already out? Well, when the market is up, it's the same thing. Everybody thinks that going up is a totally different animal than going down. It is. Trust me, I do know that. But it's the same kind of same mentality. And when everybody's on board for the market to go up, it has a very, very high probability that's going to go down. So it's one of those things that human beings in the markets are always going to be irrational, and there's going to be an irrational element that's at work, and that's what creates the market opportunities. Now, when I was showing you the sentiment cycle, that is the one way that we actually are able to see how everybody is feeling, and how much higher the market possibly could go, is by tracking the actual sentiment, how people feel about the market, what direction they believe it's going to be going to. And when everybody is bullish, yes, it could creep higher, but what happens is it goes higher, come back down, goes higher, come back down. So when you're in the euphoria phase, this is when you really want to start either taking your long positions off the table, or you want to start building a short position. And it's probably one of the safest trades that you're going to be able to make, because A, you're going to know the turn date that's coming out. B, you're going to know how investors are feeling about the market, and you usually want to take the opposite side of them. And three, if you have technical divergences that are supporting the move down, then yeah, you have like almost a 3-check program with it, and like I said, it's nothing is going to work 100% of the times, and if I was going to sit here and tell you that, I'd probably lose everybody. You just turn this off right now. But for something to be right as often as it is, especially with Woody's turn dates and his the sentiment readings and what we expect, it's pretty amazing, and we really do try to help out people with controlling their emotions and making better trading decisions. So on this is our report that we put out yesterday. Now we were anticipating that the black hole environment was going to start on the 15th. If you remember, I was sending the emails out at the end of June. A lot of people were saying that the black hole was wrong because they didn't subscribe and didn't know that it was been set on the 15th the whole time. So this was a typical black hole decline. This is the amount of time. It was almost a month, but the market kind of went sideways. It wasn't your typical black hole. Yes, we got a drop here, but once it dropped there, that's when we started getting low sentiment readings, and it came within the time period to expect a low. So yeah, it would have been fantastic if we got one of these black hole moves where it went straight down. But the market is the market, and it's going to do what it's want. But even though it didn't have that big drop, it just went sideways. So even if you got short here, it was just time that you were hurting, and it ended up you made a little bit of money. So we had last Friday we had a high sentiment reading. You can see that right here. We had the 92 and 88, and we sent out an alert that you can look to short the S&P and just put a stop above the previous high, and it worked out great. I covered my shorts the other day, and I if anybody that is getting my videos, I was suggesting it because we were at some support, and I'll show you this in the regular charts. But what it was with me, the reason why I closed them was when you look at a 15-minute chart here, that we had bullish divergences that were coming in on the S&P. And as the S&P was going into the first, these are your support zones right here, as it was coming in, the short-term charts were giving me, buy signals. So I got short up here, and I had just about my entire position taken off, and I just put a stop right here. And now I'm cash, and I'm waiting for the next move. The next trade, I think, is going to be on the short side, but as I explained, this may not be the top because this is not a bearish divergence yet. Now, it doesn't always have to make that move like that, but there's these gaps that are above that I wouldn't be surprised to see them get filled before, and this one is at the 2176. So we closed at 2171, so it's not all that much higher, but there's a chance that it may come up even a little bit higher than that. But when we start getting the bearish divergences and when we start seeing the high sentiment numbers again, we're going to know that it's time to start building a short position. And when it starts coming down, if you're just a long trade, want to trade the long side, wait for sentiment to get into extreme bearish things, look for bullish divergences, and then look to buy. So we're not just a short-sided newsletter. We actually trade both ways. It's just a little more exciting when on the short side because the markets have volatility and they move down. I personally enjoy them. So anyway, we're at the first resistance zone on the S&P. If it breaks above, I would keep an eye on that 2176 to 2182 in that range, this gap that was right here. So that's that. If we take a look at the 60-minute charts, it's just kind of a neutral bias here. And this is what I've been telling my folks is that, just keep neutral because we could be trading within this triangle. It may head up to the 2180. Just let it play out, and then from there build your short position. So no really news, but the reason why I'm kind of bearish, like in a little bit of an intermediate term, are the bearish divergences that are on the daily chart, and I don't believe that this was enough to really solve that. So I believe that these lows will be taken out, and I probably think that we're going to be trading someplace down into the 2062 level when everything is said and done. But we want to keep an eye on the sentiment, and we also want to see when these turn dates that Woody is going to let us know what to expect on it. So anyway, that's all I have for tonight. We do have a special. Anybody that's been getting these free reports on a weekly basis, you will know that we've never offered this before, but we did it in the webinar yesterday. So I'm gonna just actually offer this to everybody, and it's $9.99 for 2 weeks. Now I'm gonna give you the option to do $79.99 for the month, because obviously the $9.99 you get to test things out, but after that you're moving to our normal $149.99 a month. So we want to give you the option to do either one, but I'll have this coupon code, and what I'm also keeping is I'm going to be giving a free membership to Marcus Path as long as you remain a member of Sentiment Timing. I charge $79.99 a month, so it's almost a $960 value that we're giving away for free. So we're only doing this for a limited amount of people. We're only keeping this for 20. So if you're interested, do the $9.99 right now. And until next week, good luck with your trading.